Good morning. Good morning. So we'll begin now. I hope I'm audible and the visual is clear. If I'm audible and the visual is clear, can you just say yes in the chat? Thank you. So we'll begin now. So it is Monday and tomorrow is 8:30 CPI for US dollar, a heavy news driver, the day where price chasers get wrecked. So it is a Monday, the whole week has big news driver, and today we have a bond auction, which is basically an orange medium impact news driver at 1 o'clock. But I don't think that will be an impediment in our morning session. The main thing is CPI tomorrow at 8:30. Time currently is 9:46 a.m. New York time. So we'll begin now. Let's go to the dollar index. So previous week I was watching this fair value gap, and more importantly than this, sorry, I was not watching this, I was watching the weekly fair value gap. The weekly inversion fair value gap here. Our price is still respecting it. So we are watching this fair value gap on the weekly chart because it is a higher time frame and it is an inversion level. So right now we're watching if the weekly inversion fair value gap acts as an inversion fair value gap and acts as support or not. This week when the market opened and between the time period of Sunday opening and current time, we touched the low of the inversion fair value gap on the weekly chart. So now we'll go down to the daily perfectly. Now, if it is bearish on the daily chart, we have a small little gap here. There. If it is bearish, price should react off of that fair value gap and move lower, breaking the inversion, breaking the weekly inversion fair value gap. If it is bearish. We have a mitigation block here. If it is bearish, the mean threshold of this mitigation block right here should not be violated if it is bearish. I'm just going to draw and then take it off. This is the mean threshold of the mitigation block. Price should not go above this level if it is bearish. I'll just keep it. Right now, we are inside of the small little fair value gap. This is what I'm talking about. On the dollar index, a small little one. I think it will be more prominent on the lower time frames. For bearishness, what I don't like right now is respecting this inversion fair value gap. If it had disrespected the weekly inversion fair value gap, and I talked about this in the last sessions and some of my private sessions as well, I talked about how if it is bearish, it should go below this weekly inversion fair value gap, and this weekly inversion fair value gap should act as resistance if it is bearish. What I don't like right now for bearishness is respecting this weekly inversion fair value gap. But we'll see. Since it's pre-CPI day, we don't try to get a hard bias in line because we know the next day is going to be a big move, a very big move, and that will just violate or not violate, move in the direction of our bias, but it can easily violate the bias as well. So I'm not trying to enforce a hard bias on this day, on Monday. I'm trying to be nimble today. So now I'll just check the hourly chart. As the private member that I talked to in the last session may remember, I talked about this fair value gap and how price will reach here, and it did. I don't think he's present today in the live session. But I talked about how this mitigation block right here on the hourly chart and the fair value gap right here is a very important one for deriving the bias. On Sunday, it touched the low of the fair value gap on the hourly chart right here, and it moved lower. Now we are watching after taking out, obviously it's going to take out the buy side liquidity here. It's coming. And then we are going to watch how it reacts inside of this hourly fair value gap. This is an important fair value gap right here. This is the weekly inversion fair value gap. We will let it be. This is the weekly inversion fair value gap, and we are monitoring how price reacts inside of this in hourly fair value gap. Because it is also inside of in my private session, my private mentoring session, where I talked about how I specifically said that we will come here and we will move lower. But one thing I got it wrong was the time aspect. I wanted it to do in the morning session with some news driver, but it did in the Sunday session. That's what I got it wrong. And if Daniel is hearing this in the I I'm sure he will listen to this in the replay when it goes on YouTube. The time aspect, I got it wrong. I wanted it to touch in the AM session, but anyways. So my bias right now is going to take out the buy side liquidity above this high, and we're going to go inside of this pivot gap right here. And then if it's bearish, it should respect this CB inside of the mitigation block right here. It should react off of this red area if it's bearish, at least today. So now we're going to AS. Now, as soon as I'm done with my analysis on dollar, I on my another monitor, I load that chart and keep it there. Now we are on E-mini S&P right now. We'll go to the weekly first. We had this, and my charts are clear right now because I deleted all the drawings. But this was all what we were talking about in the previous weeks, and it got delivered. So my soft bias right now, by looking at the dollar index, is bearish for dollar. So naturally bullish for equities. That's my soft bias. And what do I mean by soft bias? Pre-CPI nimbleness soft bias. I prefer to take longs in equities today, at least today, pre-CPI. In the morning session, today is Monday, morning session. We had this weekly volume imbalance that we outlined previous. I don't remember the exact time, but we outlined this. I'm sure if you watch the Discord or last live streams that are uploaded on the YouTube channel. Every live stream that I do from now on will be uploaded for the public on YouTube, on my YouTube channel. You can watch the replay if you missed it. And another reason for uploading it is some members arrive late in the live stream, so they miss what I talked about on the higher time frames or early before they arrived. So it's for them. Or maybe if you just want to learn. I'm going to check the monthly right now. Nothing important for today that I see on the weekly. So we'll move down to the daily. Nothing here. So because it is a pre-CPI day, and okay, I'll talk about what I'm trying to say right now. I'll talk about it on the lower time, on the hourly chart, because that will be more pertinent there. I forgot to outline the buy side liquidity. That is important. This is the buy side liquidity on the weekly chart. I think price is going to gravitate towards this buy side liquidity. Dollar bearish, equity is bullish. So where is ES target? This is the drawn liquidity for ES. Maybe tomorrow, maybe CPI will do the job. I don't know. But the drawn liquidity right now is this. But I'm not expecting the drawn liquidity to hit today. I think CPI should do the job. Why am I favoring CPI to do the job? Because that will be pushing a great. I'm not going to talk about this because this is political a little bit. So I prefer not to talk about political factors. But you understand. You understand the current narrative that's in the marketplace. We don't talk about political stuff. Yeah. I mean, sometimes I can't control myself and talk about these things, but I'm not going to talk about it. Dollar made the exactly an equal high. The buy side liquidity that we denoted. It's I think it will take out the buy side liquidity in dollar on the hourly chart that we outlined. I'm going to look at Nasdaq side by side as well. This is the continuous contract. We'll go to the current contract month. Nasdaq is heavy bullish, more than yes. For now, I think ES is the sick sister. What I mean to say is Nasdaq was rallying higher strongly in the previous days, and ES was just riding on its back, being pushed to rally higher. Now that Nasdaq has fulfilled its weekly objectives and ES is yet to go for the buy side liquidity above here on the weekly chart. I think this is a drawn liquidity for ES. ES will rally more than Nasdaq now in the coming weeks until this objective has been achieved. While Nasdaq will be forced to move in rhythm with ES. On the daily chart and on the higher time frame charts. We have a bullish order block here that coincides with the high of the weekly volume imbalance. So I'm not going to mark it, but it's there. This is what I'm talking about, this level. Let's go down to the hourly. Wiki price action. Lots of wicks. I think the current new week opening gap is the drawn liquidity in ES. This is the current new week opening gap. As dollar will go for buy side, ES should go for the new week opening gap, current. Probably right stuff as I say. Nasdaq has touched a previous new week opening gap, and we have kind of an SMT divergence in Nasdaq. Nasdaq has taken off sell side liquidity. ES has as well, but I think if it came down this much, it should go for the current new week opening gap, as that is the drawn liquidity for ES. And this violates my bias for the drawn liquidity. That should have been the current new week opening gap. This fair value gap is important for the current new week opening gap to be delivered. If it goes above this fair value gap and acts as support, then this drawn liquidity is invalid. Honestly, I did not like how we closed above the fair value gap outlined here. I did not like that for my bearish drawn liquidity. And this is what you expect on a day like Monday. And what do you expect on a day like Monday? Not much, because we have CPI tomorrow. I don't think there will be a high probability opportunity forming today. Not only we have CPI tomorrow, I think we also have FOMC. I'm not sure about it, but I heard somewhere, I saw it somewhere. I think we also have FOMC on Wednesday. If dollar goes for buy side, the bearish drawn liquidity for the new week opening gap is still valid. But this is a very low probability condition right now. So just watching price. When you can clearly see the chop. I still think the drawn liquidity is here, the current new week opening gap, but I'm not going to act on it. Dollar is going for buy side. We have reclaimed this fair value gap, 5 minute one. It can still go lower for the drawn liquidity, the current new week opening gap on ES. We should also take out the liquidity below these lows. Now, if you ask me why am I not going on the 1 minute, 4 minute, 5 minute, I'm on the 5 minute, but why am I not going on the lower time frame charts than the 5 minute? Because it's supposed to be a choppy day. So since it's chopping inside, since it's chopping right now on the 5 minute, the 1 minute will kill you. Basically, on a 1 minute chart right now, you will see lots of market structure shifts and fair value gaps, and you'll be attracted towards taking those setups, and they will fail on you. The concepts work even in these days, but the basically don't be uh, it's very easy to lose in these days. It's very easy to trail your stop loss too tight and get stopped out and blow your account with multiple entries. And I am very impulsive. That's my person. That's my personality. There are basically two types of traders. The one who is fearful to take risks and the one who is greedy to take risk. And I fall in the second category. The one who has a wide stop loss and don't the one the first category is the person who doesn't want to take any risk. They will not even take a trade even if the correct setup forms. And scared money will make no money. They will Dollar should run for buy side. So what I'm trying to say is they are scared money and they will not take trades and they will make no money as well. They won't lose much, but they won't make much as well. And the second extreme category is what I fall into, the greedy money. I get impulsive, I take multiple entries and I get multiple stop losses when I'm impulsive on these days. So know yourself. That's what I'm trying to say. Know yourself. What you are most susceptible to, how you can hurt yourself. You can hurt yourself. The markets won't hurt you. You will hurt you. When I said it's a reclaimed fair value gap, it touched the low of it, then it came back again, touched the consequent encroachment of it. Now I would like, if it doesn't touch it again, and just move lower because dollar is going for buy side. So now is the time for ES if it wants the drawn liquidity that I've outlined. Again, very, very difficult day right now. Nasdaq is just not willing to go lower, and that's troublesome for ES. Nasdaq made a strong bull candle. Dollar still going for buy side and ES rallying with it, and that is troublesome. That is troublesome for the bearish drawn liquidity. This is troublesome for the bearish drawn liquidity. Nasdaq made a lower low here, and ES made an equal low here. Let's see. Because the bodies failed to violate the reclaimed fair value gap, we still have hope. Once dollar takes out buy side liquidity, and we have not taken out these lows, that's troublesome. But dollar is yet to take out buy side liquidity. So that still gives us hope that the drawn liquidity, the current new week opening gap, can still be retracted back to. Very difficult though. The thing that I'm not liking right now is the asymmetricalness. Dollar is rallying and Nasdaq ES is rallying, and dollars falling and ES is falling. Although I think my drawn liquidity will be retraced back to, I don't like the asymmetricalness right now. I'm sorry, I don't think that's a word, asymmetricalness, but that you get the point. And I think I forgot a point when I said I will talk about it on the lower time frame charts. What I basically wanted to say is, I think this day will be an inside day. On the 5 minute chart of dollar index, it touched the consequent encroachment of the wick, not taking out buy side yet, and it's starting to retrace. I'll just show you the 1 minute chart right and why I'm not going down to it. That's why. I'll just close up on this ugliness. Ugly. Very ugly. I mean, when the 5 minute is ugly, but it gives kind of something. If it was any other day, if it was a high probability day, it would have rallied, not this deep retracement. I wouldn't have expected this on a high probability day. Just maybe touched the low here, respect the breaker here, respect this breaker and move lower. This retracement, this chop wouldn't have been expected. How many times did it come here, move lower, made a wick, came back again, reclaimed the fair value gap, move lower, made a wick, came back again, reclaimed this fair value gap, move lower. How many times did it do that? This is the frustrating part, and this is the characteristic of a high resistance liquidity run. The drawn liquidity is still this. I call this as a drawn liquidity, the current new wick opening gap. But even if it does move lower, even if it does, how frustrating and how and anxiety inducing is this? Just looking at it gives you anxiety. Now it should take out. Now it should come for the drawn liquidity. If it doesn't come now, then it's over. Now's the time. Sell side engaged, sell side delivered, and dollar should go for buy side now. Very slow. immediately balancing. If it was any other day, I'm tired of saying this, but it would have smashed lower. It wouldn't have made this kind of retracement. But we are making ourselves, actually, I'm making myself sit, and by me, I'm trying to make all of you sit into this, sit through this. That is the bearish breaker that I was talking about. When price was here, on a high probability day, it shouldn't have retraced up till here. But since we're in sort of a chop condition, it will make deeper retracements than you're willing to eat. I know it's frustrating. Sit through it. It's slow, it's boring, it's frustrating. Sit through it. Nasdaq is rallying. We lose that reclaimed fair value gap, we're done. I mean, the bearish drawn liquidity is done because we have taken out sell side liquidity. So if we lose that reclaimed fair value gap, I don't think the new current week opening gap will be retraded back to. Nasdaq is rallying higher, and this is just Nasdaq forcing ES to move higher with it. And don't be disheartened if it's too complicated right now, because it really is. It's one of the hardest days to read. it should go lower now and hit the drawn liquidity, or else you're wrong with the drawn liquidity. If it's supposed to go lower, it's now. Dollar hit our buy side objective. Now I want this to act as a bearish order block, this green candle. I don't like the fact that you've taken out buy side in dollar, but it's now or never for yes. And I will answer questions after the session. I'm just trying to focus right now. I'm sorry for not answering your questions. I see them. And Daniel, if you're hearing, if you're listening to me, if you look at the dollar index on the hourly chart, you can understand the narrative that I was talking about in the private session. Dollar index hourly chart. Me too. I'm also watching it on the other monitor. Very frustrating price actually. But you know what would be more frustrating? If we were in a trade. If we were in a trade, I would have been, not that I would have been, but previous me would have been panicking with anxiety. But we're not in a trade, we are just watching price. So we are not emotionally attached to it. Although I'll be really honest, I feel like I'm emotionally attached to it because I'm calling it live in front of people, and this recording will go on YouTube. So it will stay there forever. So yes, the emotion in me is saying that if you're wrong, you'll be looked at as a fool in front of people. But it is what it is. Again, we reclaim the fair value gap, red one. Dollar gives another push higher. That can be good for our drawn liquidity on ES. And I'm not even comfortable saying that because dollar is rallying higher, but ES is like, nah. Dollar is having a low resistance liquidity run for the buy side objective that I outlined. And ES is having a high resistance liquidity run for the drawn liquidity that I outlined in ES. Sit through it. This is bitter medicine. This is the day when she says, if you don't love me at my this, you don't deserve me at my. If you don't love it at its high resistance liquidity run, you don't deserve it at its low resistance liquidity run. That's a weird analogy, but I like the fact that the bodies are respecting the bearish order block. Dollar is giving a push higher into the hourly fair value gap that I talked about in the beginning of this live stream and also in my private one-on-one session. I'll be honest, the hourly fair value gap that I'm talking about, I wanted this to be traded yesterday. I mean on Friday. But this right now is actually even better, a better narrative right now, even better. If we lose the reclaimed fair value gap, it's done. I still like the fact that we are respect the bodies of the candles are respecting the bearish order block. I don't like the fact that markets are totally asymmetrical right now. I mean, when dollar is retracing, ES is going low. That's totally, it's very low probability condition. How many times you have reclaimed the fair value gap? Can you see? Can you count? One, two, three, four, five, six, seven, eight, nine. Beginner me in these sessions would have gone into a 1 minute chart and blew up the account. That's what I did in my beginning last year, let's say. Wicks reclaiming the fair value gap, bodies respecting the bearish order block. The fact that I literally don't like right now to see 5 minute chart, ES and dollar side by side. Both have a black candle right now. This is weird. Let's look at this. Aren't you glad you're out of, you're not in a trade? I'm glad. Again, the bias is still the same. We lose the reclaimed fair value gap. The drawn liquidity is invalid. The current unique opening gap, the drawn liquidity is invalid if we lose the red shaded reclaimed fair value gap on the 5 minute chart. Right now, I'm looking at ES and NQ side by side, and I have just one question in mind. Which looks uglier? Just a fun question. Reclaim fair gap touched again. If we lose it, we are going higher. Looks like we are going to lose it. Let's see. This candle will either, I think this candle will lose the reclaim value gap. Let's see. If dollar had not taken out buy side yet, if we had not taken out sell side here yet, then I wouldn't be questioning my draw on liquidity. But right now it's questionable. And we have to reclaim the fair gap so many times now. It can violate it. And by me, what I mean by saying violate it, it can move higher if we lose this reclaim the value gap. Wicks, Wicks, and Wicks. It started the stream around 9:45. It's been almost 1.5 hours or more, and we're still close to the price where we started at. So we're pretty much chopped. And we sat through this chop. So congratulations. You're learning to be patient. So you don't become a patient of the market. We're going to close the stream if it violates the reclaimed family gap or if it reaches a draw on liquidity. Either way, too much for today now. I know you're tired as well. But till then, before you close the stream, sit, watch, and suffer in silence. As I am. Just prices leaving no inefficiency. No inefficiency at all. So price is either going to do three, price is going to do one out of three things. And you all know those three things. It's going to go higher or go lower or not go anywhere. If it's going to go higher and you're expecting it to go higher, great. If it's going to go higher and you're expecting it to go lower, you will be stopped out, and it's actually a good thing. And you will know if you're wrong and you can reverse that trade. But the most difficult thing in these markets is trying to analyze, predict, and you will get better at predicting this, but to have the patience and discipline to not do anything in these situations. The most difficult thing in these markets is this: to have the patience to not do anything in these situations. Which situations? When price is neither going to go higher nor going to go lower. It's going to stay inside of a range. If you are a little bit experienced, the only chance of you blowing your account in these situations. Can you see this? The high of the reclaimed fair value gap, the consequent encroachment of the reclaimed fair value gap, the low of the reclaimed fair value gap. Even in situations like these, the concepts work, but don't be impatient. And we're done. We are done. I'm actually happy I'm wrong. I mean, my one objective of sell side liquidity below these lows was hit. It didn't touch my drawn liquidity, but at last it's over. I know you're happy as well. So that was enough suffering for today. Congratulations, you sat through. And we're going to close the stream now. So thank you for watching. And some day after this, when you see the low resistance liquidity run, you'll be more appreciative towards it. And you'll get to see the stark difference between the high resistance and low resistance, and why we only want low resistance. You'll see it. I made you suffer through this price action. You'll be more appreciative towards it. So that's enough suffering. You can go and do some happy thing now. And we're going to close the stream. See you next time. Bye bye.